Imagine waking up one morning and watching silver lose tens of dollars in hours. Not days, not weeks, hours. Gold follows. Headlines scream unexpected volatility and natural market correction. Analysts rush on TV to calm everyone down. But here's the uncomfortable truth they don't want you to ask. What if this crash didn't happen naturally at all? What if it was designed, timed, and executed quietly behind closed doors? Stay with me. Because once you see what's hidden beneath the surface, you'll realize this market didn't fall. It was pushed. Most people believe markets move because of supply and demand. Buyers and sellers meet, prices adjust, and life goes on. That story sounds clean, logical, and safe. But it ignores one thing: power. Real power doesn't react to markets. It moves them. And in the silver and gold markets, power has fingerprints everywhere. Sudden overnight crashes, perfectly timed sell-offs, price levels hit to the exact dollar. And somehow, the same institutions always survive, stronger than before. Before we go any further, take a second and subscribe to The Hidden Ledger if you want to understand money the way insiders do. This channel exists to decode what mainstream finance avoids, and if this video helps you see markets differently, hit like right now so more people can find it before the next move happens. Now let's talk about something most charts don't show: liquidity events. When prices collapse this fast, it isn't because millions of small investors suddenly agree to sell at the same second. Retail doesn't move like that. Institutions do. Large banks, exchanges and funds operate with leverage so massive that a single coordinated move can erase billions in paper value almost instantly. These aren't emotional decisions, they're calculated operations. Think about how strange it is. Silver can trade sideways for weeks. Then suddenly, in low liquidity hours, massive sell orders hit the market all at once. Stop losses cascade. Algorithms trigger more selling. Panic spreads. And within minutes, the price is destroyed. That's not randomness. That's precision. Here's where the grey ledger comes in. Not an official book you'll ever see, but an invisible one that tracks leverage, positions, and exposure across institutions. When risk builds too high, when someone is overexposed on the wrong side of the trade, pressure builds behind the scenes. And when that pressure becomes dangerous, the market doesn't correct, it resets. Every major silver and gold crash follows the same script. First, price is driven up just enough to attract retail confidence. Headlines turn bullish, influencers call for higher prices. Then quietly, massive short positions are layered into the market. Paper contracts flood the system, not physical metal, paper promises. And when the time is right, those promises are dumped all at once. The result: paper silver collapses while physical demand quietly explodes. Coin shops run out, premiums rise, delivery delays appear. But none of that shows up in the spot price you see on your screen. Because the screen price doesn't represent metal, it represents contracts. Ask yourself this: if silver is supposedly crashing, why is it harder to find? Why do premiums rise when prices fall? Why do central banks and institutions continue accumulating gold while telling the public metals are risky? These contradictions are not accidents, they're signals. This is what a coordinated strike looks like. Futures markets, options markets, exchange rules, margin requirements and media narratives all moving in the same direction at the same time. Not announced, not explained, just executed. By the time the public realizes something is wrong, the damage is done, and then comes the cleanup phase. Analysts explain it away. Profit-taking, technical resistance, macroeconomic uncertainty. Safe words designed to end curiosity. Because curiosity is dangerous. It leads people to ask why the same players always seem prepared while everyone else is shocked. History tells us this isn't new. Gold confiscation didn't start with an announcement. It started with narrative control, market suppression, discouragement. Make people believe the asset is broken before you change the rules. Silver has played this role before, and every time, it ends the same way. Trust collapses, systems crack, and real assets reprice violently upward once control fails. This is why silver scares institutions more than gold. Silver is smaller, thinner, easier to break, but harder to control once physical demand overwhelms paper supply. Gold can be managed quietly through central banks. Silver leaks into industry, into hands, into places paper can't follow. When you see crashes like this, you're not watching weakness. You're watching stress. A system under pressure trying to release it without snapping. And the closer it gets to snapping, the more aggressive these moves become. If this were a free market, prices wouldn't collapse in straight lines. They wouldn't hit exact levels called days in advance by institutions. They wouldn't reverse instantly after panic selling finishes. But they do. Again and again. Because the goal isn't price discovery, it's control. Here's the part that matters most. These events don't punish the uninformed by accident, they rely on it. Fear transfers assets from weak hands to strong ones. Every crash is a harvesting event, and the ones harvesting already know when it's coming. That's why the hidden ledger exists, to help you see patterns before headlines explain them away, to understand that when something doesn't make sense, it usually makes perfect sense to someone else. We are not at the end of this story, we are in the middle. And the moves are getting bigger because the system has less room to hide its stress. Whether silver goes lower tomorrow or higher next week is less important than this truth. These markets are no longer about value, they're about survival. If you've made it this far, you already see more than most. Drop a comment and tell me if you think this crash was natural or planned. Share this video with someone who still believes prices tell the whole story. And if you want to stay ahead of what comes next, like this video and subscribe to the Hidden Ledger, because the next move won't be explained honestly either, but you'll see it coming.